What if I told you Netflix just walked away from one of the biggest media deals in the history and Wall Street rewarded them for it?
Got to get to some other breaking news on a story that we've been closely following because in just the last few minutes, this is a big battle that's in the media world, the business world, but it could affect the stuff you like to watch. Netflix, we've just found out it's not raising its offer to try to get Warner Brothers Discovery after Paramount did the same. Remember, Paramount and Netflix both want to buy Warner Brothers. It seemed like Netflix was the front runner until about 10 minutes ago. Okay, Paramount came out. Apparently, its offer was, quote unquote, superior.
This isn't just a takeover story. This is a 4-episode corporate thriller. Hi, this is Indranil and welcome to the Spotlight Beyond Profession.
Moments ago, Netflix said it is declining to raise its offer for the purchase of Warner Brothers Studios and HBO, following the Warner Brothers Discovery Board's determination that Paramount, which is not just going for Warner Brothers Studios and HBO, but also the whole enchilada, including us here at CNN, Paramount has submitted a superior offer, according to Warner Brothers Discovery's board.
Let's break down the Hollywood deal war that shook global entertainment. It all began with pressure. Warner Brothers Discovery Inc. was carrying nearly $40 billion in debt. Its stock price was stagnant. Investors were restless. In June 2025, Warner Brothers Discovery announced a bold restructuring plan, splitting one, streaming and studios, that is Warner Brothers HBO, and the other one, global networks, Discovery, CNN, and the linear TV. The goal, unlock shareholder value, but Wall Street mailed something bigger. A sale was coming.
All of it as there's been this political backdrop, too. Let me get to our business correspondent, Ali Canal. What in the heck is happening, Ali? Because this all developed in like the last 10 minutes.
On October 21st, Warner Brothers Discovery confirmed it was evaluating strategic alternatives. Then came the White Knight. In December, Netflix Inc. announced an $82.7 billion deal, offering $27.75 per share for Warner Brothers Studios and streaming assets. It looked done. Until 4 days later, Paramount Skydance Corporation launched a hostile all-cash counterbid, $108.4 billion, $30 per share for the entire company. The war had begun.
Takeover CNN and the rest of the Warner Bros. Discovery company, which includes HBO and the Warner Bros. Movie Studio and all those other assets. Paramount is the company that essentially put this into play last summer. New CEO David Ellison, shortly after taking over Paramount, CBS, that part of the media world, then set his sights on WBD.
On January 20th, Netflix amends its agreement to an all-cash structure to match Paramount's certainty, still at $27.75 per share. Paramount raises its offer again. Shareholders pressure Warner Brothers Discovery. A 7-day go-shop window opens. Paramount refines its bid. The tension builds.
And WBD CEO David Zaslav started a bidding war as a result. He sided with Netflix. The WBD board sided with Netflix for a deal that had been struck back in December, but Paramount had then launched a hostile takeover bid. And in recent days, Paramount had negotiations with WBD and raised the offer to $31 per share with a bunch of sweeteners that made the deal more appealing, more palatable to WBD.
Paramount submits its final blow, $110.9 billion, $31 per share, a $7 billion regulatory termination fee, plus a ticking fee for delays. The Warner Brothers Discovery Board calls it a superior proposal.
Lucas, Warner Brothers coming out saying that the Paramount offer is, quote, a superior proposal. What do we need to know?
Now all eyes turn to Netflix. Will they counter? No. Company CEOs Ted Sarandos and Greg Peters issue a memo. They are walking away. Netflix said the deal at the price was no longer financially attractive. Translation: discipline over ego. The market reaction: investors loved it. Netflix shares jumped up to 13% after hours. Warner Brothers shares fell, bidding war, hopes vanished. Paramount shares mostly unchanged. Wall Street rewarded restraint. What is Netflix's real strategy? Instead of chasing a $111 billion empire, Netflix will invest $20 billion this year into its core engine: content, films, series, global originals. In a high interest rate world, capital discipline matters, and Netflix just made it clear: growth, yes; overpaying, never.
So I think the entertainment landscape is not troubled. Right. I think the way that people consume it has become disintermediated, it's been disaggregated. I think people are doing it in a bunch of different ways, and they're favoring things that favor the consumer, which I think does play into our strength as a company. Early on and from the beginning of time, we've always moved into kind of consumer-first approach.
But is it over? Not so fast. Paramount's takeover still needs approval from the US Department of Justice and European regulators. California Attorney General Rob Bonta has already said scrutiny will be vigorous. This Hollywood merger isn't fully cleared yet. Now the final question: did Netflix lose the studio or win the strategy war? Sometimes the smartest move in business isn't buying the crown jewel, it's knowing when to walk away. For more deep dives into global corporate power plays, subscribe to the Spotlight Beyond Profession, where we decode the strategy behind the headlines. Thank you very much for watching and signing it off.